afternoon, and welcome to this episode of the Mashreq Sustainability Dialogues, a Mashreq podcast series that facilitates knowledge exchange with critical voices tasked with leading the region's drive toward net zero. Today, we're looking at financial inclusion and how it fits into broader sustainability objectives for the region. We'll explore what the landscape looks like in the region when it comes to financial inclusion, as well as what the next steps are to take it to the next level. I'm happy to welcome today's guests and hear their perspectives and insights. We have with us today Gina Petersen, Vice President and Country Business Manager of UAE and Oman at Mastercard, Ingo Muschick, Senior Partner at Synpulse Management Consulting, Namir Khan, Chairman and Founding Board Member of the MENA Fintech Association, Christian Kunz, Chief Strategy, Innovation and Ventures Officer at Dubai International Finance Center, and our Mashreq host, Radu Toplichenu, Executive Vice President and Head of Neo and Personal Banking at Mashreq. I'd like to start off by inviting our guests to make some opening statements on the topic. And Radu, let's start off with you. I welcome your opening thoughts on the theme of today's discussion.
Thank you, Thomas, and welcome everybody to this podcast. It's a pleasure to host you on behalf of Mashreq, and it's a topic which is very dear to Mashreq because Mashreq is considering financial inclusion as being a part of the wider ESG agenda, an agenda which we actively support in COP27, COP28. And we think that digitalization is a key part of the financial inclusion as it extends the reaches and reduces the cost both for the bank and for the customer. And again, Mashreq is having an excellent example of digital-only proposition, Mashreq Neo, which is an award-winning and very well received by customers. Financial inclusion is an important topic. If you are looking at some data coming from World Bank study, in 2017, 1/3 of the adults worldwide were unbanked. Yeah, and more than half of this population live in 7 economies, including Pakistan and Egypt. For example, according to the same World Bank study, account ownership in Pakistan is as low as 21%. That means that over 100 million adults do not have access to a basic financial service. This is an important topic, and Mashreq is committed to be part of sorting this out. As you probably know, we already obtained a digital banking license in Pakistan, and we are going to export Neo and our expertise to this market. Another important part from our perspective is that it's crucial to identify the key demographics and to extend the services to the groups which are historically underbanked, and this includes youths, for example, people between 16 and 21 years of age, women, rural dwellers, or self-employed. And again, Mashreq is having a specific proposition as an example for youngster. It's Neo Next, which helps the youngster, first of all, to understand how to bank and to discover the benefits of a bank account. I think one other important aspect to consider is that banks, in order to help with financial inclusion, the banks should focus on simplifying the process of opening a bank account. If you want people to become banked, the accession to banking, the opening an account should be extremely simple while we are still observing the know your customer due diligence. So I think this would be from my perspective some initial points. Please.
Thank you, Radu, for your opening comments. And Namir, I wanted to hand it over to you next. I welcome your opening thoughts, and maybe if you could give a little bit of insight into how, or walk us through how financial inclusion is tied to sustainability and how one builds off of the other.
Absolutely. So first of all, it's absolutely great to be here, and thank you, Radu, for the opening remarks. How I see this is in 2 specific segments. One is where we have been talking about financial inclusion and people having access to finance on a in general, right, which has been the case that we have been discussing. But looking at it from the lens of what is happening today is a little more exaggerated. And that's how we need to look at it. Why? Because if you look into it, financial inclusion is, again, a lot of people will lose access to finance because of a lot of climatic situations that are currently happening. So one thing that I would like to link over here, as Radu mentioned, that financial inclusion, is in Pakistan as well. It's increasing. But at the same time, what recently happened in Pakistan, for example, within just 4 weeks of floods, around, $40 billion worth plus, I would say damages have been hit. One, within just a couple of weeks, around 40 million people have been displaced. So displacement links to multiple things. One is, of course, hunger, and hunger becomes a major issue. Second, access to finance is really required. Why? Because those people need to then restructure their lives again, right? One. Two, in terms of that, financial inclusion is again very important, is because as we, what is happening world over regarding the overall population that is also increasing, simultaneously, we also see a tremendous amount of push that is coming towards a more homegrown and closely knit supplier base as well. A supplier base can only be established when you have economies and when you have structures built where people have access to economic activity, and economic activity can only be enabled when they have access to finance, right? Now, another thing that is going to happen potentially that we see why financial inclusion is an important segment is the refugee crisis, which is going to spark because of the climatic disasters, which are going to be 10x, right, as we move ahead. Now, as the refugee crisis also happened, there's going to be, we call them climate refugees, right? So climate refugees, again, at this point of need access to finance, and that's another complex piece that we need to enable. Reason being, because climate refugees are going to be those people who would actually migrate from one country to the other country based on the current situation that is currently happening in their own origin countries. So financial inclusion has an extremely, extremely pivotal role, and no SDG. I mean, if we are trying to achieve sustainability is not just by planting trees. Sustainability is achieved when the entire ecosystem is balanced, and there's a lot of equitable approach that we're taking, and finance is an integral part of it to enable and to also sustain.
Thank you. And Christian, building off of those comments, not just with sustainability, but I'm curious, I welcome your thoughts on how you see financial inclusion tying into overall economic development in the region.
Thanks, Thomas. Thanks, Radu, to be our host. Can you hear me well?
Yes, loud and clear.
Excellent. Okay. I hope this doesn't distract me. Thanks a lot for being on this conversation. First of all, financial inclusion obviously is a very big priority for the DIFC, for Dubai, and it plays a critical role in the economy as well, for the UAE and for the region. Financial inclusion, as we heard before, is quite a broad term. And if you look at the 17 SDGs, it's actually not in just one SDG. It's included in multiple, from, as we heard, zero hunger, to diversity and inclusion, to basic infrastructure and economic growth. So you'll see it in many different areas. And the reason is that you obviously have financial inclusion on one side of individuals, and we at DFC, we have a DFC Fintech fund where we invest actually in some startups that are addressing some of those topics of individual underbanked population, similar to what Neo is doing, the likes of Now Money. Beehive was another one where there's peer-to-peer lending to SMEs. But one is on the individual side, on getting underbanked populations in the region and specific in markets like mentioned Egypt and in Pakistan to access basic financial means of payments and bank accounts, and build up of that proper economic kind of presence and growth around that for themselves and for the economy. On the other side, I think, of the coin is the bigger challenge for this region, which is actually on the SME side. So while you have individuals like in the UAE, most individuals are banked, at least have the basic access, thanks to the likes of Mashreq and others having put that infrastructure in place over time, as well as the government, and in surrounding markets we see that coming up. But the other part is kind of really SME banking, and I think there's some solutions that are coming up as well. But that is a multiplier, of course. So financial inclusion can startups, SMEs access financing, bank accounts, how easy, how quickly, what type of financing can they acquire? Because that obviously ties into employment, ties into economic growth, ties into multipliers of enabling financial inclusion on a larger scale. And I think that's a really important topic for us as well. As mentioned, Beehive was one startup very early on trying to create peer-to-peer lending to SMEs. And I think we see a lot of traction in the UAE specifically and in the region on enabling kind of SMEs and startups to access the financial system and create jobs, in many cases for also underbanked populations or certain communities that haven't always had access to all the financials. And the last thing I would say, even in markets where financial inclusion is high, there might be underrepresentation of certain communities or certain genders that might be underbanked. And that's another topic that's obviously also very important. So trying to look at financial inclusion quite broad, very important, drives not just individual kind of sustainability of individuals being able to sustain themselves, but also to drive an economy and economic growth as a whole.
Thank you. And Ingo, I wanted to bring you into the conversation as well and ask how you would describe the current landscape for financial inclusion in the region. Christian touched on it a little bit with the SME side, potential multiplier effects, the fact that the UAE has made a lot of strides, but we see that different countries are at different levels when it comes to advancing financial inclusion. So I'm curious your thoughts on what you think the landscape in the region looks like at this point in time.
Yeah, thank you very much also for the invite here. And I mean, what does Synpulse do? We conceptualize and build neobanks and neo-insurers. So, I call them neo-insurers. So digital insurers with digital journeys. And as a global company, we have a global perspective on that very important topic, and we believe that's actually the future of the industry, right? Banking and insurance, it's what we are talking about. And in the region, what we observe is an arise and kind of a wave of those neo players addressing those client segments in a digital only and mobile first and cloud first, way, so that it attacks, I don't know who mentioned it, I think it was you, Radu, it attacks right the segment, the youth segment in the user experience as they have it in other apps, and make it, make financial transactions, make financial, products tangible for them, and start low and then scale up. And I think in this booming region, that's an important step. And we discussed other markets already. We are also engaged in Egypt in a project there, for instance, how this region has a positive influence on on markets with a different standing, but the huge potential when we discuss the youth segment as an example. Yeah, so that's how we see it. And of course, I guess I'm more on the insurance side, also closely observing what the regulator is doing, how supportive the regulator is. And I'm looking forward to discussing with them, the next steps that they will do to help our industry in this area, in this field.
Thank you. And Gina, building off of that, Ingo mentioned the role of regulators, saying that banking and insurance is the future for the region. And I welcome your thoughts on the part you think cross-sectoral collaboration plays for advancing financial inclusion. And, for example, how banks partner with complementary industries like Mastercard for advancing inclusion in the region.
Thank you so much, Thomas, and great to be here today. Yeah, you're absolutely right. This is an ecosystem play at the end of the day. So Mastercard, I guess sits kind of at the center of a lot of these relationships. But, when we talk about, who our partners are in driving financial inclusion, this is everyone from government to, banks to financial, new, kind of fintech operators, merchants. And, our role is to look at, bringing together those various entities and groups of people to drive financial inclusion, ultimately financial security. So, we see this, we work very closely as Mastercard with governments in defining, their overall agenda. And you can imagine we operate, in over 200 markets around the world. So, the challenges and requirements that each market have is very unique. And even within the region overall, we see differences in level of maturity, which means that, the approach for driving financial inclusion differs by market. So if you see, for example, some of the work that we're doing in Pakistan at the moment, to the point that Christian was making, a lot of the focus is on enabling SMEs and ensuring that they have the tools, whether it be in terms of the technology or the connectivity, to be able to actually facilitate transactions and also to create marketplaces. So, we enable, whether it be, end agricultural providers or, communities to be able to connect and buy and ultimately perhaps increase the value of, what it is that, they manufacture or grow. In other markets, we focus on, enabling sort of wage protection services. So to ensure that, large companies and, end employees are receiving their salaries on time, which, the great thing is in that model is it starts to create the dynamic to enable, lending, and whether that be, lending to businesses to help them grow or lending to individuals to enable their, kind of the improvement of their lives and the prospects for their families as well too. So, so our goal as Mastercard, by 2025 is to bring 1 billion more people globally into, the digital economy. And, we take that responsibility very seriously. Payments is not just about, kind of, making transactions, process efficiently. It's about, how together as a collective, group of entities and governments and actors within the industries, that we can come together and drive that collective growth. So it's something that we take very seriously. And more we start to see, banks and telcos coming together. And, we have started to see, kind of the industry start to become a lot more connected to help, drive scale and drive that adoption, to help facilitate payments and then ultimately growth.
Thank you. Well, bringing in 1 billion people is certainly a huge number. And it's very interesting, the comments about how the approach may differ by market, where what is the best approach in one country might not be the best approach in another. But regardless of the market and of the approach, what we've seen in parallel are these developing technologies that have really impacted the landscape in the past several years, and especially with the rise of the smartphone, with 5G connectivity in several key markets in the region. Christian, I wanted to bring you into this question, how you see the role of technology playing out in the next couple of years for advancing financial inclusion and financial empowerment.
Yeah, happy to share some thoughts on that. I think it's obviously at the core of it. And we've seen a huge increase in financial inclusion through the application of digitization and technology that basically enable to bring down cost to serve a mass market that might not be, economically viable for a lot of banks or financial institutions if they had to serve them in the way that they traditionally serve their customers. And so I think, Neo is probably a good example of where you can really efficiently reach a large segment, and in some cases probably even provide a better service than in the old models to this market, and get them to use the financial services in a very efficient way. And at the same time, I think if we look ahead, there's a lot of new trends, I would say, but there's still a lot of work to be done that can further enhance this. And I think there's, everybody on this call is doing a lot of work in this space, so everybody can probably share their own experience as well. But I would say there's obviously a lot in just building the basic infrastructure, on enabling, we have payments, and we have startups in the UAE, for example, that are trying to build infrastructure for startups to actually build new ventures that might enable financial inclusion. And that can reach from open finance or open banking solutions all the way to, issuing cards at scale, to those companies. And I think so those, technologies or foundational infrastructure, at scale is quite important to scale those efforts and those ventures up. And we see that happening in the UAE and in the region. And we hope to see that more, further around the whole, the larger region. We see now this year is obviously the year of AI. AI starting to mature into mass markets, and I think there's lots of opportunity and threats, but I think there's lots of opportunity also using AI to further enhance financial inclusion, and further use that technology to enable new ways of reaching customers and maybe qualifying customers, identifying trends, credit scoring and other available means. And lastly, obviously, and I think we're now in the maturing stage of digital assets. So digital assets are also quite an interesting space that enable new use cases for certain types of customers that might have not really been able to access the traditional banking system. And so in some markets, we see a big leap. We see a lot of interest now from central banks on central bank digital currency as well. That might create more efficiencies and reach specific into areas where maybe traditional infrastructure or traditional means of financial service weren't available as easily. So technology, in my view, plays an enormous role. It can be a catalyst. At the same time, it also creates a lot of challenges, and I'm sure Radu can tell a story about it. So being able to manage that technology from a financial services point of view, and Mastercard, I'm sure you have a lot of experience in that as well. How do you now apply, like what kind of new measures do you need to put in place to apply the same scrutiny at such a large scale, right? And there's, again, AI, data, KYC solutions that are getting better, but are also important to not just deliver the service, but also ensure that you don't get any bad actors to misuse that push towards financial inclusion.
Absolutely. And to that point, Ingo, it was mentioned, building basic infrastructure, leveraging AI, know your customer protocols. These are developing all over the world in a lot of different regions. And from your experience, I'm wondering if you've seen any lessons to be learned from other regions around the world that have successfully implemented or advanced financial inclusion, and how those lessons can be applied to the Middle East.
So I can certainly jump in on the technology side, because ultimately, a lot of the work that we're doing right now is how do we, kind of enable our partners through scalable solutions. So if you look at, say, something like Tap on Phone, which is, a technology solution that enables merchants to be able to convert their mobile device into a point of sale device, basically. Technologies like this, particularly in markets where mobile penetration is, relatively high, become a very quick enabler for, small merchants and micro SMEs. In addition, in, some of, kind of the more emerging economies like Africa, we have actually, kind of partnered with, government entities and key partners to be able to actually manage the infrastructure rollout as well too, to ensure that, kind of you remove those barriers to acceptance. So for us, as a technology business, everything that we do ultimately provides, a technology rail, to be able to, further facilitate transactions as well too. To Christian's point, AI absolutely is at the center of, particularly being able to, ascertain a person's, kind of likelihood to repay. And so there's a lot of great AI-based solutions now, which can be used, in any market as long as the data is available, to be able to start to make decisions around lending. So, when you work closely with the regulator, when you work closely with, financial institutions, the AI solutions that we introduce can empower them to make those decisions and be able to make faster decisions, particularly around lending or KYC or onboarding, which are, kind of some of those barriers that certainly, can limit access and inclusion overall.
And with these increases, or rather these operational efficiencies that are increasing, Ingo, I'll throw this one at you. Do you think that there are certain elements within the umbrella term of financial inclusion that are more of a priority for the region compared to other elements? And some things that come to mind when I ask that question for me are opening a savings account for the first time versus establishing a line of credit, for example. And I'm curious your thoughts on whether they should be, all approaches should be pursued simultaneously, or if there is more of a priority on, say, opening a savings account for the first time. And Ingo, feel free to jump in there.
Yeah. We'll pick up this point and, bring it into context. I think, just came to my mind, the difference between, like front end technology that we see and then, the back end. So, how do you run a bank or an insurer sustainably? You master your business, you are super efficient in the back. where also AI can play a prominent role. And then the backbone of the backbone, right? So the connectors between the players in the ecosystem, the open concepts, and API, economy, connectors between the different players so that you have and achieve an ideal transaction cost close to zero, right? Whenever you open a bank account, whenever you, do a KYC check, whenever you do a risk assessment on the insurance side. And this all has to nicely play together. Yeah. And of course, this is maybe also something from other regions to bring in, as we can go digital fast here and, don't have to take care of too much legacy in very instances. We can avoid steps that in very mature markets still have to overcome. Yeah. And so our belief is, it has to go line and, or in sync, this building of let's say the overall and back end and backbone capabilities in the markets, back to the regulator, back to the innovation funding in the region, that those, startups and business ideas also find their space beside the front end. But the front ends, of course, to encapsulate and, detect the new client engagement and user experience stories that makes adoption easy and, starts maybe on a low level, but then scales up because we are very dynamic. People in the micro segment today might be in the just normal banking or insurance segment tomorrow, and then maybe in the affluent or wealthy segment, a decade later.
Absolutely. And Namir, kind of building off of those comments, Gina mentioned earlier that it's not just, one sector, but it's an entire ecosystem that can be involved in advancing financial inclusion. And the backbone, some might say that the backbone of the backbone of the backbone is the regulatory environment and the role that central governments play in public policy. And I'm curious your thoughts on elements of a robust regulatory framework that's conducive to advancing financial inclusion and what that would look like to you.
So as you mentioned partially yourself, like it's the key components from KYC, as Gina also mentioned, right? From KYC to seamless onboarding, and typically encouraging, because we have had this conversation with central banks and say, hey, when we had this typical issue, I would say on an SME level, that the bank accounts are one of the most difficult things, not just in one country, but in multiple countries to open up for an SME. The central banks would say that the push is, we encourage the banks to open up the bank accounts, but unfortunately, there are many instances where banks would actually, because of their due diligence process, would potentially say no to a company opening up the bank account. So there has been the regulatory push is always there. I think the intent and action needs to be two-sided. It cannot be one-sided, where a central bank would say, or regulator would say, yes, you need to open up the bank accounts, but then, the banks would say the central bank has strict regulations on us where we need to be extremely strict in terms of onboarding. One. Two is that once that is done, I think one of the only thing that I believe, in terms of the regulatory framework, if done correctly, and in most of the countries, some countries do that, is to keep a very strong check in terms of what sort of, company, what's the status and what's the progress of how many bank accounts are being opened up, as basic as that for the small, medium enterprises or individuals itself. And, being able to track this on a granular level would make a significant difference in terms of that. Regulations are already in place. There's no country that would say don't open up a bank account for an SME. There's no country that would say don't open up a bank account for an individual. Every country would say that. Every central bank would say that. But I think once the frameworks in terms of accountability is in place, it would change the game completely altogether. And it's going to fast track. Now, that is on the regulatory piece. The second piece is, where the regulator needs to play a role is also going to be working hand in hand to enable fintechs that are eventually going to enable that onboarding and make it seamless. Because the world is changing. It's not the same as it was, 2 years before, right? Or 1 year before. So, what needs to be done is, for example, on, digital onboarding, right? we do have typical difficulties still when it comes to digital onboarding. There would be a fintech that would be offering much more seamless digital onboarding, much more robust digital onboarding, but they cannot go and execute because there are going to be data laws and regulations that may not implement, or that would actually hinder their growth in the market. Simultaneously, if there's a lending product, right, there's a lender which a bank wants to basically onboard, but the central bank would say, oh, you need to be regulated, and unless you get regulated, you won't be able to go live. And now you go into a complete loophole, a black hole, I would say, where this is where the fintech dies, right? Where you go into a black hole and they're like constantly trying and burning the cash and they die, right? So I think the regulatory framework should be more on enabling these components that are going to enable the larger financial institutions to actually fast track and be able to make that impact. So regulatory framework needs to be more on a fintech level. Top level, it's already there. Fintech enablement is then going to enable us to then achieve those goals that we are trying to achieve.
Thank you. And Gina, whether it's the government itself or the private sector, nonprofit or microfinance institutions, there are these metrics that remain top of mind when measuring financial inclusion. And as Namir mentioned, just a simple measurement on how many accounts are opening or the percentage of a population that's banked is already a pretty key metric. And I'm curious your thoughts on other metrics you think might be key, or some key data points to keep an eye on to track how the path of financial inclusion is proceeding.
Yeah, sure. I mean, and obviously, kind of getting accounts open is, kind of one step in the journey of enabling, for example, let's say the merchant ecosystem. Then you need, them to be able to facilitate transactions. So obviously monitoring the volumes of productivity, then also mapping the, I guess, end payments for, okay, are they actually, using, kind of solutions to make payments to their sub-suppliers, or are they then, kind of making their wage payments through a digitized system as well too? There's no point in, sort of enabling an SME and then they simply receive money and then, withdraw that cash and then the cash comes back into the ecosystem. For us, it's about, managing all those data points and all the potential points of interaction to ensure that we're digitizing those across the board. I think, maybe it was Christian or Radu who mentioned it earlier, is that we also have to look at things such as, diversification as well too. So these are metrics to keep our eye on as well too, to ensure that we're delivering on financial inclusion in a truly inclusive way. So a lot of, our focus is around ensuring that, female entrepreneurs receive, kind of the same level of support, if not potentially more in some instances, to ensure that, that level of, I guess, equality there is there when enabling the ecosystem as well. So I think, I guess to answer your specific question, there are a number of key markers, obviously that point to utilization, which, we'd obviously need to keep our eye on as well too. And then, if part of the concern when banks, if the regulator is supportive of lending, but the banks are cautious, then, it's very critical to, start to build a database that showcases that ability to pay and, kind of that allows SMEs to build a run rate and to build, the ability to secure some lending from the banks as well too. So I guess there's quite a lot of data points to look at to ensure that, we're not simply just opening accounts for SMEs or for individuals, but then, we're getting that utilization, and coverage overall then as well.
Thank you. And Christian, as we start to wrap up the podcast, I wanted to ask you as well, financial inclusion played a fairly large role in COP27 last year in Egypt. It touches on several of the United Nations Sustainable Development Goals. And of course, COP28 is happening here in the UAE at the end of this year. So in terms of the outlook and the landscape, the horizon, what's on the horizon for financial inclusion in the region? I'm curious your thoughts on what you see are the immediate next steps for the rest of the year and into 2024 on that front and what that looks like.
Thanks. Great question. I hope a lot. Maybe just commenting on what Namir and Gina said before. I think as regulators, we have to do more and faster. As DIFC, we work very closely with the MENA Fintech Association, with Mastercard, with Mashreq and other industry players, obviously on advancing that future of finance and financial inclusion. And in many cases, the private sector and we are moving much faster than the regulator. And so this has to change. Open finance was one example where this is a core element of accelerating a lot of those efforts and enabling that. I would say the regulators are not moving fast enough, but we do see some in the region moving fast, like Saudi, that actually managed to do that and not overcomplicate it. And so I hope that we will see more pace, more understanding of actually the technology opportunity and how to address the risks in a meaningful way. And jointly as an industry community really drive that forward. I think I'd love to see more of that. I think COP28 obviously interesting. I would expect that financial inclusion will be discussed from a different perspective in this COP than in Egypt, because in Egypt, financial inclusion, as mentioned before by Radu, is a very, very big topic, especially on the individual side. It's not as big in the UAE. However, globally, it's obviously important, but there's bigger topics this time as we are coming to kind of the halftime mark of taking stock of where we are against the climate goals and the SDGs. And so I think there will be a lot of conversation around financial inclusion more in terms of being inclusive with frontier emerging markets, the global south versus the global north. How does that link together? And so I think the conversation on financial inclusion will be on a much higher level, but on a fundamental level that will lay the foundation and is the foundation to then enable the implementation in the markets and make those policies, the regulations, and then the actual private sector implementation of those initiatives possible. So I think that will be critical. But yeah, I think there's a lot more that we have to do across the board on individuals and SMEs, and I'm glad that we talk about it, and I'm glad that industry is coming together and the regulators are here to support, hopefully.
Well, certainly a lot to keep an eye on, especially as we approach COP28 and how that incorporation into broader objectives for financial inclusion might be different for COP28 than it was in COP27 last year. As we near the end of our time together, Radu, I wanted to hand it off to you for your closing comments as well on the topic.
Yeah, first of all, I would start to thank all the participants. Extremely interesting insights and a very interesting conversation. So thank you all for being here. Now, just to summarize, I think when it comes to the extending of the financial services to socially and economically marginalized individuals, banks have the resources, have the infrastructures, and the expertise to drive the change. Mashreq being the first in the region, the first digital bank, I think our sharp focus on enhancing personal banking services and implementing digital solutions creates a big opportunities by reach the overlooked groups by leveraging technology. And I really liked the points made by the other participants that financial inclusion, it's not addressing just individuals, but it's also very important for companies, to make much easier for a company to start banking and to start doing business. And here I failed to mention in the introduction, but I will do it now. We are also having a dedicated solution for SMEs, NeoBs, which allow the clients to open an account practically very, very fast and very, very easy. And then, of course, facilitating payments here. Gina, you'll know very well about our NeoPay solution, which also it's very easy to use and help spreading the financial inclusion. For me, it was very interesting, the conversation about the regulators. Indeed, the regulators are playing a very important role when talking about financial inclusion. Now, coming from a different market, I have to say that here in UAE, I found the regulator very forward-looking and very open. I think the regulatory environment is very supportive for financial inclusion. And I'm very happy to see also in the other markets where we are expanding, like Egypt and Pakistan, the regulators supporting financial inclusion. For me, as a newcomer in the region, this is a very pleasant surprise. And last but not least, I think all of you mentioned before, but I will reinforce it. Opening an account, it's the first step towards the financial inclusion. But opening the account, it's not the end goal. Nobody comes to the bank just to open an account. People are coming to obtain a mean for reaching a higher goal. Is it to finance their education? Is it to build their business? to rise every day. There is a goal behind opening the account. And I think beyond this first step, again, we as banks, especially Mashreq, are very well positioned to help the clients to achieve their goals through financial inclusions.
Great. Thank you very much. And thank you to all of our guests. Our half hour together has come to an end, but we've had a very insightful discussion around the topic of financial inclusion and how it goes hand in hand with broader sustainability objectives in the region. I'd like to thank all of our guests individually for being with us today on this edition of the Mashreq Sustainability Dialogues. Gina Petersen, Ingo Muschick, Namir Khan, Christian Kunz, and our host, Radu Toplicenu, thank you for speaking with us today, and please join us again in the future.